If you haven't heard about Anchor, it's the easiest way to make a podcast. Let me explain. It's free. There's creation tools that allow you to record and edit your podcast right from your phone or computer. Anchor will distribute your podcast for you so it can be heard on Spotify, Apple Podcast, and many more. You can make money from your podcast with no minimum listenership. It's everything you need to make a podcast in one place. You're listening to Africa Business Radio, where you get up-to-date insights on the Africa business landscape. Log on to www.africabusinessradio.com. Your favorite shows are available as podcasts. Download them on our website and mobile app. Africa Business Radio, towards a profitable Africa.
Afternoon. Here is the news on Africa Business Radio this afternoon. As the business news, my name is Shepherd God's Baby. The headlines of the news: Kenyan Power reported on ditching post-paid meters, orders new ones. Surge in the price of gold as investors activate panic mode. Nigerian equities started 2020 bullish. South Africa gets darker as Eskom announces further load shedding. Now the details. In a surprising move, Kenyan electricity distributor was reported to have undone its initial plans to phase out post-paid meters across the country. In a tender notice that was put out recently by the Supply Chain Department of the East African utility giant, the Kenya Power and Lighting Company plc invites bids from eligible tenderers for supply of 199,157 single-phase post-paid meters, according to Kenya Power, in a tender notice by Joyce Ochieng, its supply chain general manager. This move appears as counterproductive to the general notion that prepaid meter would further strengthen its moves to improve revenue, tariffs collection and turn around its financial fortune. Following the recent development after the assassination of the Iranian general Qasem Soleimani, who was the head of the elite Quds force and also a top Iraqi militia commander, Abu Mahdi al-Muhandis, in a drone strike ordered by the US President Donald Trump last week, the price of spot gold rose to an all-time high during the early hours of today as markets open across Asia and sub-Saharan Africa. According to the market data obtained, the price of the precious metal rose to a level last seen almost 6 years ago. This represents a clear indication that investors are rushing to savor assets in a bid to avoid being caught up in the possible risk in the equity market as speculations of an imminent war between Washington and Tehran. Spot gold was up 1.2% at $1,547.19 an ounce as of 10:12 GMT this morning, having touched its highest since early September, when bullion scaled a multi-year peak of 1,557. The US gold future rose 1.4% to $1,549.70. According to the latest market performance data from the Nigeria Stock Exchange, investors went home smiling as at the end of the trading session for the week ended 3rd January 2020. Tracking the various markets, NSE All-Share Index and market capitalization appreciated by 2.09% to close the week at 26,968.79 and 13.019 trillion naira respectively, and also a year-to-date returns of 0.47%. The NSE 30 Index, NSE CG Index, NSE Premium Index, NSE Banking Index, and the NSE Insurance Index all recorded a positive year-to-date return, except the Pension Index and the Main Board Index that recorded negative year-to-date returns. There is also an indication of an impressive both the volume and the value of trades compared to the previous week. A total turnover of 2.309 billion shares worth 21.67 billion naira in 14,906 deals were traded this week by investors on the floor of the exchange, in contrast to a total of 735.702 million shares valued at 7.132 billion naira that exchanged ends last week in 7,138 deals. South Africa's power utility giant announces a further load shedding for January 2020 following the report that came in mid-afternoon on Monday 6 January 2020 as a warning to whom it may concern. Several Eskom facilities break down during the festive season, and as a result, Eskom's system is in a critical condition that warrants for a further Stage 6 load shedding. This is an indication of a 6,000 megawatt drop from the grid to avoid the system becoming unstable. In the report, this Stage 6 load shedding also means that customers could be without electricity for up to 10 hours as compared to an average of 4 hours commonly experienced in Gauteng. Over the weekend, Eskom went to Stage 2 load shedding, dropping 2,000 megawatts from the grid, but had demand being at normal levels with everyone back at work, it would have been necessary to move to Stage 6 on Saturday and Sunday. You're listening to Africa Business News. Hard work pays. Creativity does. Stay with us to bring you more after this time out. That's Africa Business News.
This feels like the final football match between two soccer warriors. Oh my God, can somebody please tell me what the African formation is? Oh, it's 4-4-2, amazing, cool stuff. That's just super amazing, isn't it? Africa Business Radio is doing 4-4-2 on the news with 40% Nigerian stories, 40% African stories, and 20% global stories. Now that's what I call a homegrown, hot-drinking goal! Go, 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 go! Yes, go!
Welcome back to the Africa Business News on Africa Business Radio. This afternoon, the federal government made 1 trillion naira from various financial reforms initiatives like Treasury Single Account, TSA, whistleblowing operations of anti-graft agencies. This was disclosed by Permanent Secretary, Special Duties, Ministry of Finance, Mohammed Dikwa. Dikwa explained that President Muhammadu Buhari's administration had been able to prevent the leakage of 700 billion naira and recovered 300 billion naira at a period the government was in need of liquidity. This amount was saved through various financial reforms and initiatives that prevented wastage and leakages of funds. Dikwa said that 300 billion naira had been saved by anti-graft agencies of government in collaboration with the Ministry of Finance, Budget and National Planning. He made this known while speaking at his send-off dinner. He has reached the mandatory retirement age of 60 years. According to him, some of the reform that aided this government's financial management of public funds included Government Integrated Financial Management Information System aimed at improving public expenditure, managing processes, and the Integrated Personnel and Payroll Information System to improve the effectiveness and efficiency of payroll administration for government workers. Also in the news, the National Pension Commission (PENCOM) is taking steps to raise pension bonds through the Debt Management Office (DMO) to offset the 400 billion naira pension arrears of federal retirees. The Acting Director General PENCOM, Aisha Dahiri Umar, said the Commission had been engaging relevant authorities in order to ensure funding of the arrears accumulated through accrued rights. According to Section 39, Subsection 2 of the Pension Reform Act 2014 mandates the federal government to pay into the Retirement Benefit Bonds Redemption Fund account an amount not less than 5% of the total monthly wage bill payable to employees in the public services of the Federation towards the redemption of the accrued pension rights of federal government retirees. In the last 5 years, according to a report, budgetary funding releases had not been regular and adequate for the payment of outstanding accrued pension rights as a result of declining government revenue. To clear the debt, PENCOM submitted a suggestion to the government to consider issuance of bond through the DMO instead of placing the burden on budget allocation. According to a source in PENCOM who spoke on the delay of pension arrears, the Commission had been in talks with the DMO on how to raise the pension bonds to clear the pension arrears. While the discussion is still ongoing, the federal government said some funds should be released over a period of time. But as the funds have not been released, we're still trying to see the possibility of raising the pension bonds to clear the backlog. In other development, the Nigerian presidency has spoken, saying Nigerians must stop going to UK and US and other places for treatment. President Muhammadu Buhari spoke this to Nigerians in the habit of traveling outside the country for medical treatment, talking about Nigerians have suffered so much going abroad for medical treatment, and that is not good for us and it must stop because we can't afford it again. Disclosing this at the Alex Ekweme's Federal University Teaching Hospital, Abakaliki, during the inauguration and handover of completed projects to the management of the hospital, the Minister of Science and Technology, Dr. Ogbunaya Onu, represented Buhari, opined that the country can no longer afford traveling abroad for medicals. In his words, he says, "We've paid very serious attention to the health of our people and will continue to do so. The projects you celebrate, their completion today was seriously affecting the workings of this teaching hospital." Recall that President Buhari in the recent past spent over 50 days abroad for medical treatment and checkups. And that was the Africa Business News coming to you from Africa Business Radio this afternoon. My name is Shepherd God's Baby. The news was put together by Soji Akinlabi, produced by Shepherd God's Baby. Join us on Facebook, LinkedIn and Instagram at Africa Business Radio, and on Twitter at Africa Biz Radio. We're streaming live at www.africabusinessradio.com. You can download the app on Google Play Store and on Apple App Store. Until 6 p.m. we'll bring you more. It's good afternoon.
You're listening to Africa Business Radio, where you get up-to-date insights on the Africa business landscape. Log on to www.africabusinessradio.com. Your favorite shows are available as podcasts. Download them on our website and mobile app. Africa Business Radio, towards a profitable Africa.